Good afternoon and welcome to Matters Financial and Geopolitical. I trust the week's gone well. We've had some rain here in Nairobi, it's rather pleasant. Let me start with, if you haven't watched the interview, I know Charlie's sound was low, but we're beefing that up. Do have a listen. That's an interview with Charlie Robertson I did this week, end of last week, about the globe, about what's happening in emerging markets, frontier markets. He was very bullish about Pakistan, which I found interesting, amongst many other details that he gave us. Macro thoughts, this is from N. Nicoletos. This is a comparison between the euro and German government bonds, Bunds, practically following it tick for tick, as you would all note. And this is another chart by him as well, the euro versus the dollar. We're currently at 109.25. We're doing a bit of work around here, but we will go below 109 even as soon as today. Home thoughts, I went back to T.S. Eliot, The Hollow Men. Between the idea and the reality, between the motion and the act, falls the shadow, for thine is the kingdom. And if you trade for a living, I think that's a powerful poem. Sleeping with the Enemy, taken by Jose Fragoso. This image shows one of the Black Rock Pride males guarding a killed zebra from being eaten by other predators or scavengers. And Jose is a fantastic photographer, and his wife is the Portuguese ambassador to Kenya. Sailing home, Peter size 10. I was trying to work out whether that's Lamu or whether that's Mombasa. I'll leave that for you to guess. I go back to the article I was writing over the weekend, and specifically the mention of The Spire by William Golding. God the Father was exploding in his face, which is initially as enigmatic as it is dramatic, until it is resolved as a metaphorical description of sunlight streaming through a stained glass window. I was reading a very interesting article in the Yale Environment 360 magazine. Global oceans have warmed unabated since 1970, taking up more than 90% of the excess heat in the climate system. The rate of ocean warming has more than doubled since 1993. I wrote about this in November 2015, and I said, I cannot help feeling we are like frogs in boiling water. We have created massive interference in the cosmic fine-tuning phenomenon. Marine heat waves have doubled in frequency and become longer lasting since 1982. This is a photograph of Maputo taken from the sea. The upper layers of the world's oceans have already lost up to 3.3% of their oxygen since 1970. This is a photograph of Ali, the navigator, who navigated our way to Asini Island a few years ago. Marine species in the upper layers of the ocean have shifted poleward an average 20.5 miles per decade since the 1950s. This is a photograph of an evening in Maputo again. Global sea level is rising 3.66 millimeters a year, 2.5 times faster than the 20th century rate. Greenland, Antarctica, and the world's mountain glaciers are currently losing about 720 billion tons of ice per year. Arctic snow cover in June has decreased by more than half since 1967, and the annual minimum for Arctic sea ice cover has declined almost 13% per decade since 1979. Jorge Luis Borges, Reality is not always probable or likely. Political Reflections, Devin Nunes, in this short video, accuses the Democrats of trying to obtain nude pictures of Trump. And I thought that is psychological warfare on the recipient of the photographs, surely. Brexit source, the EU believes that the Brexit negotiations have stalled and the possibility of reaching an agreement in October is very limited. What a surprise. This is a chart of sterling. We're last trading at 122.90. I'm expecting us to fall through 120 this time and go a lot lower. I wrote about sterling in August, at the beginning of August this year. I quoted, "What's your road, man? Holy road, Madman road, Rainbow road, Guppy road, any road. It's an anywhere road for anybody, anyhow, where, body, how." And I said the key question, this is 5th of August, is, can Prime Minister Johnson self-eject Britain? Yes, he can, it seems. Can he be stopped? No, I don't think so. This is a political calculation. And I was writing about 1992, which was when I first arrived on the trading floor at Credit Suisse First Boston, and I must say I never met that level of intellect that I had at that time on that trading floor. As I watched the pound fall like a stone, I could not help wondering if this sterling moment is precisely like it was in 1992, a no-brainer, and I think it is. Sterling falling on these comments from the Bank of England's Saunders, who is the most hawkish of the NBC, and clearly signalling it's time for a rate cut. And then I came across this from Peter Dobby, who's at Al Jazeera. UK Prime Minister Boris Johnson knows he can keep on asking for a general election. Labour and Corbyn know they don't want a general election. Johnson knows this too. The Prime Minister's endgame is that the UK flops out of the EU. Corbyn's endgame is Brexiteer or not, you vote Labour, can't be done. UK Parliamentary Speaker, that's John Bercow, says an election cannot happen before October the 31st. 1st of April this year, I was writing about how the theatre of the UK Parliament is, I am ashamed to admit, rather more interesting than was the Oresteia. And the Oresteia performance I was referring to was Peter Hall, who staged an Oresteia in London, and really actually was a tremendous play. But I was terribly young then and did not have the wherewithal to sit through 5 hours of theatre. The frontier from Xinjiang to Kashmir, from Gaza to Crimea, from Hong Kong to Taiwan are 21st century flashpoints. Of course, there are many other frontiers, the Mediterranean Sea, the Sahara Desert, islands because of the EEZs they control. My article last weekend was streaming dreams, non-linearity, crude oil, about which I'm very, very bullish, and Netflix, about which I'm also bullish. Now, look at this. This is from Nicoletos again. Foreign investments into China are decelerating. Point number one. I wrote about this whole phenomena in an article called The Feedback Loop Phenomenon, which is linked on Rich Wrap-Ups. 27th of May, I said the China-US war, the direction of travel is that it's going to turn ballistic, notwithstanding Trump's tweets. Because ultimately, I think, like President Obama said, he said, I'm a train driver. The track's been set, I can slow it down, I can speed up the train, but I can't change direction. And I think essentially Trump is in the same spot as Obama was describing. 9th of July last year, I wrote Tariff Wars, Who Blinks First? And to wit, look at this, looks as if the globalization bubble has burst, trade policy uncertainty is at a record. President Adesina of the African Development Bank, he's mercurial, he's a bow tie toting Adesina, said the US-China trade war and uncertainty over Brexit pose risks to Africa's economic prospects that are increasing by the day. And he said the following things: I think the trade war has significantly impacted economic growth prospects in China. Therefore, import demand from China has fallen significantly, and so demand for products and raw materials from Africa will only fall even further. I think our policymakers are completely behind the curve. They still think Xi was Santa Claus. He's not anymore, and he wants his money back. It will also have another effect with regard to China's own outward bound investments on the continent. That signal has already been emitted by Xi. The US-China trade war continues to intensify, notwithstanding the fact that aides have now admitted Trump made up high-level phone calls with China to boost markets. You might have forgotten that one. So, look at China's foreign investments to the rest of the world. They're plunging. This is Nicoletos again. China's foreign divestments to the rest of the world are accelerating. Nicoletos again. China's capital account is rapidly falling. China desperately needs capital inflows to keep its balance of payments intact. If, when inflows stop, the PBOC will be forced to let the renminbi depreciate in order to turn the current account positive again. And that's something I was writing about on the 13th of August. I was talking about the feedback loop phenomenon, and I said the most important currency to watch right now is the renminbi, which is at 7.11 and 75, but we could see a big break lower in that renminbi at any time. Let's go to the currency markets. Euro dollar 109.25, dollar index now moving towards 199.227, Japanese yen 107.90, Swiss franc 0.9937. The pound fell sharply. It's currently at below 123 at 122.87. I think we're going below 120 and then considerably below that. The Aussie has been confounding expectations, 0.6762 last, India rupee 70.79, South Korean won 11.99.29, Brazilian real 4.1689, I think that's the next shoe to drop. Egyptian pound steady, I expect it to remain strong, 16.30, they cut rates 100 basis points, but their rates are the highest in the world or close to. South African rand 15.1195, that's going straight to 15.50 and then it's bye-bye the rand. King dollar, this is an interesting chart from the market here. It gives you the dollar index and then it's giving you the emerging market currencies, which I expect now to fall out of bed. As I said at the end of last year, on the 31st of December to be precise, the direction of the dollar is therefore pivotal, that I was then in a minority and expected the dollar to strengthen about 10% in 2019. I said then folks are keenly looking for chinks in the US economy. But I said if the US economy slows, I can guarantee you the rest of the world will slow further, which is exactly what has in fact happened. Imploding euro back to May 2017 levels and refuses to catch a bid will last at 109.22. We're going to break 109 later today in my view. Commodity markets, this is a great chart again from the market ear. Black versus yellow gold since the October 2018 crisis. Extremely interesting chart in point of fact. Gold has attracted a lot of hot money, a lot. It's going to fall now because it feels to me as if the inverse correlation with the dollar index is being reasserted and everybody is long. Price action a few days back confused many as the breakout higher looked realistic, but gold reversed lower abruptly. The yellow metal is currently breaking below the 1500 level, which we're now below 1497.25. Breaking below the 1500 level and the big trend line. Watch the close carefully, that was yesterday. 1500 and 1490, there is a lot of vacuum. My article about the drone strike in Saudi Arabia, drone strike deep inside the kingdom, I quoted Thomas Pynchon, no matter how the official narrative of this turns out, these are the places we should be looking, not in newspapers or television, but at the margins, graffiti, uncontrolled utterances, bad dreamers who sleep in public and scream in their sleep. And I was saying I'd previously used Hunter S. Thompson to describe Iran, and look, they are at the same age, but I said my mistake was to assume that Saudi Arabia wasn't the edge. There is no honest way to explain it, because the only people who really know where it is, are the ones who have gone over. WTI, according to T Commodity, who I follow on Twitter, because I'm not a chartist, I like to follow chartists, says it's trying to break out of the wedge. And now we're at $56.48, and I agree with him, and therefore I am now bullish fundamentally and bullish on his chart analysis. Emerging markets, Singapore industrial production minus 8% year on year, JS Blockland. This is what I describe as the China, Asia, emerging markets and frontier markets feedback loop. The feedback loop had been largely positive for 2 decades, and it's now in reverse. China exerted the power of pull over a vast swathe of the world over the last 2 decades. We can call it the China, Asia, EM and frontier markets feedback loop, largely positive for the last 2 decades, with the renminbi now in retreat and in a precise response to Trump. This will surely exert downside pressure on those countries in the feedback loop, of which Singapore is clearly one, Germany is another, Africa, the continent, is another. Turkish locals FX deposits rose to a record $192.7 billion as of last week. And this is all to do with Erdogan's hocus-pocus monetary policy, which is how I characterized it to Sputnik. Which is correct. EM bond yields have declined to 5.3%, close to their 2013 lows, as you can see from this, from the market here. I take you back to February 2018 when I was writing about Halcyon Days. Wikipedia has an article on Halcyon Days, and it reads thus: from Latin Alcyone, who was the daughter of Julius and the wife of Ceyx. When her husband died in a shipwreck, Alcyone threw herself into the sea, whereupon the gods transformed them both into halcyon birds, which are kingfishers. When Alcyone made her nest on the beach, waves threatened to destroy it. Julius restrained his winds and kept them calm during 7 days in each year, so she could lay her eggs. These became known as the Halcyon Days, when storms do not occur. Today the term is used to denote a past period that is being remembered for being happy and or successful. And I was saying at that time, which was February 2018, the JP Morgan's MB spread was down to 258 basis points, the tightest since mid-2014. And I said, then how long this lasts is anybody's guess. And I said, then emerging markets and frontier market borrowers surely need to get their skates on and pull the trigger real quick on any borrowing they've been considering for this year. South Africa were quick on the draw, for example, recently. And because I think the dollar is about to metastasize into what Peter Frankopan tweeted: I am the powerful, the dreadful, the punisher of rebels, the hunter of Franks, Tartars and Armenians, the snatcher of castles from rogues, and the master of the 2 seas. And then I remembered the quote from Wole Soyinka: a tiger, read the dollar, doesn't proclaim its tigritude, it pounces. Let's move on to Sub-Saharan Africa. The IMF released a statement regarding Zimbabwe. The expectation is that growth in the economy will be steeply negative in 2019. Economic difficulties have continued throughout 2019. Exacerbated by severe weather shocks, GDP growth in 2019 is expected to be steeply negative as the effects of drought on agricultural production and electricity generation, impact of cyclone Idai, and the significant fiscal consolidation to correct past excesses serve to drag on growth. Social conditions have deteriorated sharply. That's why I called it a laboratory experiment, with more than half of Zimbabwe's population, 8.5 million people, estimated by the UN to be food insecure in 2019-2020. This was the breadbasket of Africa. It's criminal. Weakening confidence, policy uncertainty, a continuation of FX market distortions, and a recent expansionary monetary stance has increased pressure on the exchange rate. Since the February currency reform, the exchange rate has depreciated from 1 to 1 to 1 to 16.5, fostering high inflation, which reached now almost 300% year over year in August. Steve Hanke has a totally different number, which is much higher. Policy actions are urgently needed to tackle the root causes of economic instability and enable private sector-led growth. The key challenge is to contain fiscal spending consistent with non-inflationary financing, tighten monetary policy to stabilize the exchange rate, and start rebuilding confidence in the national currency. There isn't any confidence. And I'll get to that because Yuval Noah spoke about currency, and I think that the point he's making is key, actually. Risks to budget execution are high as demands for further public sector wage increases, quasi-fiscal activities of the RBZ that will need to be absorbed by the central government, and pressure to finance agriculture could push the deficit back into an unsustainable stance. There is also a need to strengthen FX market operations, improve transparency on monetary statistics. These adjustment challenges are magnified by slow progress on international re-engagement. It's not going to happen under President Mnangagwa's watch. Efforts will be needed to be intensified on both economic and political fronts to drive Zimbabwe forward. You might guess what a recent expansionary monetary stance is referring to between the lines. 8th of October, the government's voodoo economics, this was 2018, it spent $1.3 billion pump priming the economy ahead of the election. Money it did not have. And I think that was the straw that broke the camel's back. 21st of June, I said the point I'm seeking to make is that there is a correlation between high inflation and revolutionary conditions, and Zimbabwe is a classic example. I also said there is a straw in camel's back moment, but predicting that moment is always a fool's errand, particularly in Zimbabwe, where the people are terribly patient. Robert Mugabe, I wrote about his death. I said most of Zimbabwe's citizens are born free. The fight for independence was real, but is no longer relevant, is it? We are grateful to all those iconic leaders who liberated our continent, of which Mugabe is one, but at what price? Fighting for independence is not the same as building an economy which provides opportunity for all its citizens. As most African leaders, Lord Mugabe, Pastor Evan Live, argues there can be no mixed feelings, misconceptions, or complications about Mugabe's legacy. He presided over the destruction of millions of people's lives over a span of 37 years. Emerson Mnangagwa, who is eulogizing Mugabe as a revolutionary icon, has failed and is frankly as untenable as his erstwhile mentor. Returning to the challenge of money, and I take you back to this book I read by Yuval Noah, he said money is the most universal and most efficient system of mutual trust ever devised. Without trust, there is no money. There is no trust in Zimbabwe, therefore the money, there is no money. Money is accordingly a system of mutual trust, and not just any system of mutual trust. Money is the most universal, most efficient system of mutual trust ever devised. Cowrie shells and dollars have value only in our common imagination. Their worth is not inherent in the chemical structure of the shells and paper, or their color, or their shape. In other words, Money isn't a material reality, it is a psychological construct. It works by converting matter into mind. And I said the mind game that ZANU-PF played on its citizens has evaporated in a puff of smoke. I then quoted Kapuscinski, the choice of that moment is the greatest riddle of history. If the crowd disperses, goes home, does not reassemble, we say the revolution is over. Now I was saying then, what's clear to me is that Zimbabwe is at a tipping point moment. We're in the end game now. It might be tomorrow, it might be months away, but make no mistake, it's the end game in Harare. Weakening confidence, policy uncertainty, continuation of FX market distortions, recent expansionary monetary stance has increased pressure on the exchange rate. South African all shares up 4.81% year to date. Might go higher as the rand becomes weaker and the weighting is towards gold shares. But I think gold is coming down as well. Dollar versus rand 6-month chart. Last I looked, we're around the 1509.16 level. It's going straight to 1550 and then it's bye-bye. Egypt cut its interest rates by another 100 basis points yesterday to 13.25%. But these are so high and handsome, these interest rates, the currency barely moving. As I expected, this is a chart of the Egyptian pound, last at 16.311 and staying right there. EGX 30 bouncing again, up 6.3% year to date. The backdrop to this is that those subsidies are used to keep Nigeria's petrol prices capped at 40 US cents a litre. This makes it the 7th cheapest country in the world for fuel. Nigeria's federal government spends way more on fuel subsidies than it does on health, education and science combined. The only issue is that there is some local government spending on education and health that I have not factored in. Nigerian all shares down 12.25% year to date. Ghana Stock Exchange Composite Index down 11.27% year to date. Lourenco woos the New York elite, says Africa Confidential, under pressure from falling revenues, mounting debt and high expectations. The president pledges radical change, sweeping promises of a multi-billion-dollar privatization program, including the state oil company Sonangol. Lourenco attracted top diplomats and business people to the Council on Foreign Relations in New York on the 23rd of September. I am not a puppet, President Felix Tshisekedi keeps insisting, most recently to the Belgian government and the Congolese diaspora in Brussels during a recent state visit. However, accusations of corruption against the president's appointees are weakening him in his fight with Kabila. Tshisekedi points as evidence to the closure of the notorious Cachot's dungeons of the Agence Nationale de Renseignement, the secret police under his presidency, the freeing of all the political prisoners who were immured there, and in the crumbling prisons, and the firing of the ANR's head, Caleb Moutonde, a close associate of former President Kabila. Took Monday's news that Thomas Cook Group had gone bust. The travel operator brought more than 40% of Gambia's annual visitors seeking sun and white sand beaches had collapsed. When I heard the news, I nearly collapsed, said Jallo, who employs a dozen people at a restaurant, Kololi, a seaside resort town on the Atlantic coast just outside the capital, Banjul. Tourism is my life. Tourism accounts for 30% of GDP in the former British colony. I wrote about the Prime Minister of Ethiopia rather hagiographically. Prime Minister of Ethiopia, I said, needs to execute real quick on the economic front, but if he levels the playing field, a whole troop of folks will be looking to pile in, I said. And we've learned today the State Minister of Finance, Eob Tekalin Tolina, said that Ethio Telecom had appointed international consulting firm KPMG to help with a process aimed at selling off stakes in the telecom company. Africa Confidential, writing about Kenya, article called Bridge of Sides, a bid to build alliances across the country's ethnic divides, owes more to political ambition than to altruism. The BBI was set up to bring together the country's competing ethnic groups under a new national ideology and better system of government. At least that was the idea agreed between President Kenyatta and his new ally Raila Odinga in the historic handshake of March 2018. Gives equal prominence to 9 areas: ending ethnic antagonism, creating a patriotic ethos, ethnic inclusiveness, ending the pattern of polarizing elections, strengthening devolution, strengthening public security, fighting corruption, promoting shared prosperity, and respect for human rights. The most contentious part of the report will recommend a parliamentary system of government with more positions at the top of government distributed, reflecting Kenya's ethnic diversity, a president with a deputy and a prime minister with 2 deputies. This will divide the ruling Jubilee Alliance, as Ruto has twice campaigned for Kenyatta on the promise that he would inherit a unified and powerful presidential system. Ruto tours the country, inaugurating public projects, using the stopovers to consolidate his base, and giving large sums to build churches. Kenyatta sees this as insubordination. Using the opaque security budget, the permanent secretary in the Ministry of Interior, Karanja Kibicho, has under Kenyatta's orders sponsored an anti-Ruto movement in the Mountain Kenya region, the Kileweke Group. The aim is to undercut Ruto's initiatives, supported by the rival Tanga Tanga group of MPs, saying that Anne Waiguru is the point woman for an Odinga presidency, and few doubt that a statement could have been issued without the president's permission. In that, she told Kikuyus and Kalenjin followers to forget running for the presidency and give other tribes a chance. Ruto is working hard to bring under his wing the disenchanted Odinga supporters among the Luhya, the Bukusi and the Kamba, and from the coast. The ethnic and ideological lineup behind the deputy president is changing. Odinga support among the Luhya in Western Kenya, Kamba and coastal communities is falling. He has angered his leftist brains trust, including the likes of David Ndii and Maina Kiai, by forming his new alliance with the wealthy Kenyatta family. Nobody can tell where the dice will land, and that on the basis of this report and the eyes of many Kenyans, Kenyatta has decided for now to back Odinga and sideline Ruto. Kenya shilling lost at 103.75, but that also looks a bit ropey to me. Nairobi all shares up 2.9% year to date. NSE 20 is down 13.91% year to date. Thank you for listening. Wishing you a great weekend.